Hello, this is Steve Swanson with TheMarketForecast.com. I'd like to take a minute here and just review what we looked at this morning in terms of a forecast and what actually happened today. Let's take a read through the forecast. March 13, 2007. Let's start this morning by looking at an important chart in terms of market internals, new highs versus new lows. Below I've posted two charts. The first high-low chart I posted on January 22nd of this year. The second is the current chart based on yesterday's close. We'll scroll down and take a look at those. Notice that I've put two channels. This is the one from January 22nd, and this was from yesterday's close. What we're looking at here is the number of new lows that have been forming, which usually occur during major market bottoms. It hadn't happened up here yet, but as we can see, we've been closing in on that same kind of new low. Notice from these that although the important decline we were projecting for the markets back in January took its time getting here, we have seen at least part of that significant low anticipated. As you can see on these charts, it is historically rare to have only a single bottoming move down without a retest of that low before the true intermediate long-term rally ensues. By looking at these charts, you can see that there was a double bottom formation here as well in 2005, and here as well in 2004. The only exception recently was the bottom that occurred in October of 2005, at least in terms of new highs versus new lows. More often, a second or even third low is needed before markets are finally ready to once again turn bullish. That is why I remain cautious as short-term cycles top out. Yesterday, those cycles hooked back upward for one more move to top out in the upper reversal zone of the forecast charts, but we must now be ready for their decline. Let's take a look at those down here. Here on the Dow Jones, which would also be representative of the S&P, we can see that those had broken into the upper reversal zone where moves back down usually begin. And we can see on the NASDAQ that was especially true. Though the Dow has rallied above its 5-day moving average, and that average has turned upward, if that moving average will hold as these short-term cycles retreat, I'll be more apt to believe that an intermediate low has in fact been reached. But for now, I am still expecting a retest of the recent lows before I change my trading bias back to bullish. In other words, folks, more downside today and likely in the few days ahead. Thanks for joining us. Steve Swanson with TheMarketForecast.com.